What do real estate giants and disruptors, Compass Real Estate, Rex Homes, and Better.com have in common with Theranos and WeWork? Well, there's been a lot of headlines come out recently in the last 2 weeks that have some very interesting news, and we're going to take you all through it. By now, you've probably listened to the podcast or the live action show, We Wrecked and The Dropout. We Wrecked was on Apple TV with Jared Leto, and The Dropout was Amanda Siegfried, I think her name is. Both amazing stories. These are based off of companies that were valued in the billions at one point. In the case of WeWork, mismanagement and overspending led to a valuation that was a fraction of what was initially projected. For Theranos, once valued over $10 billion, massive amounts of investment capital was dumped into a product that was ultimately a complete fraud. Investors in both companies lost hundreds of millions of dollars. First, let's take a look at Rex Homes. If you're not familiar with Rex Homes, they were initially a company that offered low-cost commissions to home sellers and home buyers. They were put into the spotlight when they spearheaded the antitrust lawsuit against Zillow and the National Association of Realtors. Well, on May 11th, the American Genius reported that Rex Homes may have closed its doors. A couple days later, Real Trends reported an email sent by Steve Dawson, Rex Homes Chief Compliance Officer, stating, "Starting immediately, please transfer your license over to a new brokerage of your choice. This needs to be completed by the day's end tomorrow. Contact them requesting your license. If you're having trouble finding a brokerage who will take the current license, please look for a smaller brokerage who might be more likely to assume the escrows," end quote. Did I hear that right? This is a company that has been trashing the real estate community for years, and now they're telling their agents to go to a traditional traditional real estate company with their current transactions, okay? Also a note from the American Genius is this quote: "What has been especially interesting with this company is staff's consistent fears of CEO Jack Ryan, consistently citing a fear of retribution, not just professionally, but personally. And several told us we should worry about our own personal safety, having been the only news outlet covering Rex's unraveling." These are employees that are in fear of the CEO. And I'll put a link down to all these articles. You should see some of the stuff that it says about the CEO, Jack Ryan. But let's get back with what they have in common with WeWork and Theranos. Number one, also reported the same Real Trends article, they hired David Boies. If you saw The Dropout, David Boies was the litigation attorney, quite possibly the most famous litigation attorney of all time, and he was also on the board of directors of Theranos, and he was featured prominently in the miniseries. Like the case of WeWork and Theranos, they brought massive amounts of investor capital, and like WeWork, Jack Ryan promised employees stock options to lure them in lieu of a higher pay, okay? But different from WeWork, Rex Homes did not go public. Before we get into the rest of the companies, I want to ask the audience, if Hulu or Apple TV or HBO launches a show, who do you think will play Jack Ryan on the miniseries? I've got a side-by-side comparison here. One of my friends suggested Shia LaBeouf. I don't know, I think it could work. What do you think? Okay, let's move on to Compass. After losing nearly $500 million last year, Compass reports its first quarter loss of $188 million, according to The Real Deal. That's a pretty high burn rate when you only have $476 million in the bank. Compass CEO Robert Refkin was reported as saying, "We will do more with less. We are managing the business to ensure that we will not require additional capital." Like WeWork, Compass has hundreds of millions of dollars invested from SoftBank. Also like WeWork, its initial public offering did not go as anticipated. In the Real Deal article, Refkin suggests that they will be coming up with more ways to be profitable. What does that mean for the employees and the real estate agents that are with Compass right now? Well, with 2.5 quarters of burn money left, one could speculate that one of the more likely ways they could achieve this would be to drop services, cut staff, or raise the percentage split that the brokerage takes from its real estate agents, or more likely, a combination of all three of these. I would not put Compass CEO Robert Refkin into the same category as Jack Ryan. He's a very thoughtful man with a great story. But with this type of burn rate, you have to think, how can they turn this around? And I want to know from you, do you think Compass can get through this period where real estate is starting to slow down and they're running out of money? Another commonality of WeWork is that they boosted the billions of dollars of revenue they have when they had massive losses with that revenue. Revenue, as we know, is not the same as profit. When WeWork's IPO failed in October 2021, I think that a lot of us started saying, you know what, let's stop evaluating companies by how much money has been invested in it. That's a flawed way of thinking that in the last 5-10 years, somehow we've been thinking, okay, we've got $2 billion in this company, so it's worth $2 billion. Well, if there's $2 billion in a company and the losses is $500 million, I don't see how you can value it that, right? Now let's look at another real estate disruptor, Better.com. The CEO, Visual Garg, is certainly an interesting character. Note the headline on the Real Deal article. He threatened to burn his partner alive. Now he's a billionaire. According to TechCrunch, Better.com CEO, Visual Garg, acknowledged he took a $750 million loan that he personally guaranteed from SoftBank. The article goes on to say, Garg, quote, remains responsible for all such losses, which could require him to, among other things, sell a significant portion of his holdings in Better Home and Finance common stock, which could negatively impact the trading price of Better Home and Finance common stock. Interesting headline right there. Once again, like WeWork, Better has been infused by capital from SoftBank. I think that their burn rate is something like $100 million a month. Once again, we've got this polarizing character, kind of like Jack Ryan, with a history of erratic behavior. And to quote the Daily Beast, reported in January that Garg, a volatile entrepreneur with a history of disgruntled business partners, had given huge amounts of equity to one of his most loyal lieutenants in a way that violated norms and seemed to defy expectations. She was reportedly given $1.25 million in options that were immediately vested, which is not the norm for most of these types of situations. Just 4 months later, she left the company. The Better.com announcement comes when interest rates have soared from previous lows. Can they get around this? This is like hard time to be burning so much money and losing business, because you're definitely going to lose business as interest rates go up. According to the article from The Real Deal, Goldman Sachs recently sold the majority of its stake, and of Better's key investors, Pinebrook Capital, is threatening to sue the company and Garg over, quote, fiduciary responsibilities. I'm really curious to hear from the real estate community about what you think is going to happen to these companies. Do you think they're going to make it to the next year? I mean, obviously Rex Homes is done. This is a company that has been very negative to the real estate industry at its whole, and now they're gone. What's going to happen to the DOJ lawsuit? Let me know. Like, subscribe. We've got some great content coming on, and links to all these articles are in the description below. Let me know what you think.